Forex trading tips for beginners. Expert insights. Forex trading can be both exciting and challenging, especially for beginners. To navigate the Forex market successfully, it's important to gain knowledge, develop skills, and adopt effective strategies. Here are some expert tips to help beginners on their Forex trading journey. Educate yourself. Start by educating yourself about the Forex market. Learn about the basics of Forex trading, including currency pairs, trading hours, market participants, and fundamental and technical analysis. Take advantage of educational resources such as books, online courses, webinars, and reputable websites to build a strong foundation. Set realistic expectations. Understand that Forex trading is not a get-rich-quick scheme. It requires time, effort, and dedication to become a successful trader. Set realistic expectations and focus on continuous learning and improvement. Treat trading as a business and have a long-term perspective. Practice on demo accounts. Before risking real money, practice trading on demo accounts provided by brokers. Demo accounts allow you to familiarize yourself with the trading platform, test different strategies, and gain confidence without the fear of losing money. Use this opportunity to refine your trading skills and develop a trading plan. Develop a trading plan. A trading plan is a crucial tool for success in Forex trading. It outlines your trading goals, risk tolerance, trading strategies, and money management rules. Stick to your plan and avoid impulsive decisions based on emotions. Regularly review and update your trading plan as you gain experience and adapt to changing market conditions. Start with adequate capital. Ensure you have adequate capital to withstand potential losses and have enough funds to trade comfortably. Avoid over-leveraging or risking too much of your capital on a single trade. Effective risk management is essential to protect your trading account from significant drawdowns. Manage your emotions. Emotions can significantly impact trading decisions. Develop emotional discipline and avoid making impulsive trades based on fear or greed. Stick to your trading plan and stay focused on your strategies. Implementing proper risk management techniques will help you manage emotions effectively. Start with major currency pairs. As a beginner, it's advisable to focus on major currency pairs due to their high liquidity and lower spreads. Major pairs such as Euro-USD, GBP-USD, and USD-JPY have more stable price movements and better trade execution. As you gain experience, you can explore other currency pairs and trading opportunities. Keep a trading journal. Maintain a trading journal to track your trades, record your thoughts, and analyze your performance. Reviewing your trades regularly will help you identify strengths, weaknesses, and areas for improvement. Analyzing your trading journal can provide valuable insights and help refine your trading strategies. Stay informed. Stay updated with economic news, geopolitical events, and market analysis. Economic indicators, central bank announcements, and political developments can significantly impact currency prices. Stay informed about the factors that drive the Forex market to make more informed trading decisions. Continuously learn and adapt. Forex trading is a continuous learning process. Stay curious, explore different trading strategies, and adapt to changing market conditions. Attend webinars, read market analysis, and engage with trading communities to gain insights from experienced traders. Embrace a growth mindset and always seek opportunities to improve your skills. Remember, Forex trading involves risks, and there are no guaranteed profits. Be patient, disciplined, and persistent in your learning and trading efforts. With time and experience, you can develop the skills and knowledge needed to become a successful Forex trader.